they are. We've shown that this stuff is happening, and it may not be there in those charts that we've talked about earlier on this year, but finally we're able to document this process happening. And I think those who are imposing these sanctions and those who are supposed to be implementing them should be asking themselves, why is this still happening 2.5 years on? And this is part of the explanation for why Russia isn't facing an economic crisis at the moment and is able to wage war so effectively against Ukraine.
And it begs the question, what can corporates do about it? I know you spoke to Jaguar Land Rover, who said they are fully compliant with the sanctions list. Is there anything they can do?
They are, and they are struggling. They are trying their hardest to try to prevent this kind of thing from happening. They have a duty to try and prevent this kind of thing from happening. There is this enormous black economy which is developing to try to get these vehicles through. They say that it's quite difficult once they've actually entered, even though we provided those VIN numbers to JLR. They say it's difficult to actually stop them, to make them ineffective, but they are trying their hardest. But nonetheless, this continues. And this is something that we've documented. It's something we've been talking about for quite some time. Even after our reports showing that these flows of goods are happening, we were seeing those cars continue. And the latest month that we have data for July, that shows around £30 million worth of UK car exports, again, going through to Azerbaijan in that case, and also to places like Georgia and Kazakhstan. So it's still going on, even 2.5 years on.
OK, we'll leave it there. Ed Conway, for now, thank you very much. Well, let's continue the conversation now. And joining me is Stephanie Baker. She's a senior writer at Bloomberg, and she's also the author of Punishing Putin, Inside the Global Economic War to Bring Down Russia. Thank you, Stephanie, for your time this morning. And Ed's report, they're showing what we believe to be the first filmed evidence of British-made cars crossing into Russia. What do you make of his findings?
Yeah, that was a really great report. It was something that my book, Punishing Putin, went into. I didn't go to Russia personally because I didn't feel safe enough to travel there, but I did work with a Russian reporter to check out these parallel imports. And he detailed this system of, particularly in other former Soviet states, a system of parallel imports, and particular that's visible with cars. It is having an effect on the Russian economy, though, because there are costs that are being passed on. My reporting showed that Western cars in showrooms in Russia, in Moscow, in January, at least, of 2024, were on sale for at least twice as much as they were going for on the U.S. market. So that is feeding into a broader sticky inflation that Russia is suffering from. Inflation in Russia is 9%. The central bank has had to hike interest rates to 19% to try to cool prices, and is sort of working against Putin's war economy. He's showered all this money on defense factories, on bonuses for soldiers to go fight on the front. That's fueled inflation. The central bank is trying to cool that, but the sanctions are contributing to high inflation, which is weakening the Russian economy long term.
Especially those who don't have deep pockets. But let's just have a look at the wider picture, if you will, because we know that Russia became the most sanctioned country in the world. 30 countries trying to isolate that economy when they first invaded Ukraine back in 2022. Of course, we're 2 years on now. So what is the state of the Russian economy right now?
Right. Well, you've seen Russia able to respond and recover from these unprecedented sanctions, the largest coalition that's ever tried to isolate an economy as big as Russia and is integrated in the Western financial system. You know, this is not Cuba, this is not North Korea, this is not Venezuela, this is a completely different ballgame. Russia did falter, its economy did falter in the first sort of 6 weeks after the invasion in response to these unprecedented moves, including the freezing of Russia's central bank reserves in the West. But then it recovered on the back of high oil prices. And that has been the central challenge facing the Western coalition trying to undermine Putin's ability to finance this war, has been Russia's central role as an oil exporter. He actually profited from the war he started because oil prices spiked amid panic over Russian supply and people kind of moving away from wanting to touch Russian oil. So that has enabled him to continue to earn huge amounts of money from oil, and that is the main challenge. However, What's happened more recently, the U.S. and its allies, UK, Europe, have stepped up warnings about sanctioning foreign banks that do business with sanctioned entities in Russia, so-called secondary sanctions. And that has actually caused a chill, particularly among Chinese banks that have been facilitating a lot of these parallel imports. And you see a shortage of Chinese yuan. So there is pressure building within the Russian economy right now, and it's expected to slow significantly next year.
We have to leave it there. Thank you so much for joining us. Stephanie Baker, senior writer at Bloomberg and the author of Punishing Putin Inside the Global Economic War to Bring Down Russia. And Ed Conway has written an in-depth report on what he found out in Georgia. Just scan the QR code on your screen now to read it. It is well worth a few minutes of your time. Let's get some of the day's other business stories for you now. A really big day in the markets today. The markets have been soaring in Asia and Europe following a surprise raft of stimulus measures announced in China. China's central bank has cut the requirement for bank reserves. It's also slashed interest rates on its loans to commercial banks. The move is designed to address the severe property market slump in China and weakening consumer demand. The travel group TUI says it's on track for its annual earnings to rise by at least a quarter as people continue to prioritise holiday spending. A German company, reported a rise in summer bookings of 6% and an increase of 7% in winter holiday reservations. Let's see how those markets are doing now. The S&P 500 and Dow Jones reached new closing highs last night. Well, as you can imagine, in Asia, markets are soaring following China's surprise stimulus package. Hong Kong's Hang Seng Index was up nearly 4% after that decision. That is the best day in over 7 months. Shanghai had a similarly positive session, up over 4% on the close. Now, on to Europe now. Markets bouncing everywhere, a sea of blue there, following that news from China. Continental Europe looks a little like this. Also, stocks have been doing particularly well. The likes of BMW, Mercedes-Benz Group and Volkswagen leading the way. We talked about TUI. They're also making gains after those positive quarterly profits. And we're going to have a look at the FTSE 100 now. It is trading higher by 0.4%. Mining companies are leading the way on this index. The likes of Anglo American, Glencore, Antofagasta and Rio Tinto all enjoying gains this morning. There is stocks to the downside. Let's check in on those for you. Smiths Group, big engineering company, the biggest European faller, down 6.59%. Full year results disappointing. We will be talking to the CFO in a few minutes' time, so stay tuned for that. Quick look at the pound, remaining at its highest levels against the US dollar in 2.5 years. It is currently trading up nearly 0.2% at 1.34. On the oil market now for you, of course, all eyes watching oil as rising tensions are in the Middle East. A barrel of Brent crude currently setting you back at 75.67. That's up 2.41%. Let's get some expert opinions for you now. Laura Fole, Equity Income Fund Manager at Janus Henderson, joins us now. Laura, good to have you on the programme. What a day. You've been kept on your toes, that's for sure. Tell us your views on the Chinese central bank's intervention. What's the significance of this in your opinion?
Never a dull moment, you're right. I think what surprised the market is really the breadth of the measures that have been announced today. So there was wide skepticism that China would hit its economic growth forecast of 5% for this year. So people were expecting some sort of stimulus effort. But it's really, as I say, the breadth of these measures. So we've had measures across, for example, the mortgage market. It's really, as you said previously, that the property downturn that's surprised to the downside in China. So they've implemented measures to bring down mortgage costs for people. They've also lowered what's called the reserve requirement ratio. What this means is that banks have to deposit less with the central bank so that they can go out and lend into the broader economy. So there's a whole host of measures being implemented. And I suppose what we now need to watch is whether this has the desired impact on the real economy, because undoubtedly it has been slowing.
It always makes me chuckle when we talk about Chinese growth being sluggish at 4%, because we would love that, wouldn't we, particularly in Europe. But what could the longer term impact be for markets? We saw those markets in Asia doing well, 7-month highs. Do you think that feeling could continue?
I think what we've got to bear in mind is the share prices that are reacting today are generally coming off very low levels. So, for example, the likes of luxury, so Burberry is performing well on the London stock market this morning. Burberry has lost over half its value this year. So it's up a couple of percent this morning, but really in the scale of things, this is a very minor reaction. And I think what the market will wait for now is is this having the desired impact? So, for example, we saw a big profit warning from the likes of Mercedes a week or so ago. I think people will wait and see these stimulus measures. Are they actually making things on the ground better? Because when we speak to companies at the moment that operate in China, they're saying it's very tough and often getting worse. So I think the market will need to see an actual real world impact before making the next move.
Laura, let's get your views on how the pound is doing. As we looked just a few minutes ago, it was trading at 134 against the dollar. Really strong run. How long could that continue, do you think?
I think what we've got to always think about with currencies is they reflect perceived strength of various economies. So the fact that the pound sterling has done so much better this year, if we think back to Liz Truss, people were talking about the pound at one point being parity with the dollar, and where we are now, as you say, 134. We've come a long way. And I think what that reflects is that actually economic growth in the UK has surprised to the upside this year. And we've seen consensus forecasts for GDP growth here moving up. We're not talking about particularly stellar levels. As you say, we're talking about nowhere near what China are trying to get to at 5%. It would be great if we achieved 1.2, 1.3% growth this year. But nevertheless, economic growth forecasts have been moving the right way. Some, such as Goldman's, are starting to talk about, could we get to 140 versus the dollar? You never know. I mean, the level that sterling used to always be at, the long run average versus the dollar, is 1.5. And it was Brexit that really changed that and the pound reset lower. But if economic growth momentum continues, why shouldn't we start to think about where the long run average was, so moving back towards that 150 level? That's not a forecast, but that's saying that's where we used to trade. That used to be anchoring point.
And before we go, because we're running out of time, all eyes, of course, on Sir Keir Starmer's speech in Liverpool this afternoon. A much more positive response we had from Rachel Reeves yesterday. What's the city looking out for from Sir Keir today?
I mean, we're always on the lookout for policy announcements, but I would say we're not expecting any great market-moving announcements. What I'm looking for is more of a shift in tone. And why I say that is UK consumer confidence had been on an upward trend and then took a dip down. And I think the tone around things getting worse can't have helped that. I think the market and me as well, we're looking for a more positive tone. Going back to that point about the UK economy actually doing a bit better, it would be nice to see that reflected in some of the commentary from the government.
OK, we'll leave it there. Laura, thank you very much. Laura Folder, Equity Income Fund Manager at Janus Henderson. Still to come this morning here on Business Live. Shares in the British engineering firm Smiths Group, the biggest faller this morning following their full year results. I'll be speaking to their Chief Financial Officer, who's coming up next. Do stay tuned.
I think all of those people who are criticising and carping, especially those who are carping about their pay levels, really should absolutely shut up. And I do think there is something about an older woman in a position of authority that some young men find hard to take. So,
Our app gives you the very best of Sky News wherever you are. Breaking news, videos and analysis.
Evidence of the crisis.
Podcasts watching us live.
I'm live in Jerusalem.
Wherever you get your podcast.
All in one place and all at just the touch of a screen. The Sky News app. Get the full story first.
I'm David Blevins, and I'm Sky's senior Ireland correspondent. Politically, the two sides are as far apart as ever, and it's over that question of who has sovereignty in Northern Ireland, the very issue that's been the source of tension here for generations. I've spent 25 years reporting the journey from conflict to peace.
The political parties of Northern Ireland have reached agreement.
We already know what the government gets out of this deal. What exactly does the DUP get out of it? Well, £1.5 billion. If there's anyone who might know how to fix Northern Ireland's devolved government, it's the American architect.
Changes in circumstance require changes in approach.
If we both contract COVID-19 and end up in hospital, religion's nothing.
If there's a hard border, I think it'll cripple the country.
I say
Bring it on.
With America divided and tensions running high, get ready for an election like no other.
Join our teams as we follow the campaign trail as America decides.
We will win, win, win.
Get closer to the action this US election with full reaction and analysis.
Sky News, the full story first.
You want to talk business? Meet me in the On-Board Lounge. Fly Emirates, fly better.
Welcome back. You're watching Business Live now. So Keir Starmer will make his first conference speech as Prime Minister this afternoon, promising light at the end of the tunnel. So how are UK business leaders feeling about the economy, and what are they hoping to hear from the Prime Minister today? Well, the FTSE 100 engineering company Smiths Group, which makes airport security screening systems, among other things, posted its full-year results this morning, up 5% to £526 million. And joining me now is Claire Sherrer. She is the Chief Financial Officer of Smiths Group. Claire, welcome to Business Live. It's good to have you on, and I will talk about your results in just a few minutes' time. But if you don't mind first, we're looking ahead now to the Labour Party conference in Liverpool that's happening this afternoon. The Prime Minister, Sir Keir Starmer, speaking, saying we think that he'll say there'll be light at the end of the tunnel. And as a senior leader in a FTSE 100 company, do you share his optimism over the outlook for the UK economy, given you do a lot of business here?
Well, thank you, Emma, for having us on today. And it's really not my place to comment on government policy, but what I can comment on is what we're experiencing today. And the results that we reported today reflect that. So 5.4% organic revenue growth, 8.3% earnings per share growth, and that on top of record growth last year. Also beating consensus both on the top line and the bottom line. Also very front-footed. We've announced 2 acquisitions in North America. And we have a confident stance as we enter FY25. We gave a confident guide for FY25 for continued growth in the range of 4 to 6% organic growth and also continued margin improvement. We benefit from being exposed to secular trends that have a real tailwind right now. So the experience that we're having right now is a very positive one.
Well, and that's great to hear. What about within the UK? Because, of course, you have exposure to the UK economy as well as all other economies around the world. What is your outlook for the UK right now?
Well, our business in FY24 in Europe and in the UK was very positive. We had very good growth. And again, that's because of the trends that we're exposed to, namely safety and security and energy efficiency, where our customers are really making investments in those opportunities. The other thing that I would say is we're benefiting from our innovation commercializing and dropping to the bottom line. So when we look at the growth that we reported this morning, 200 basis points of that growth was driven by new products that we introduced over the last 5 years.
I just want to ask you quickly about innovation. As an engineering firm, innovation is at the heart of what you do. We've talked an awful lot about innovation from the likes of the Inflation Reduction Act in the United States and the CHIP Act that's also been in the States. We haven't had that kind of policy here in the UK. Are we lacking in that? What would you like to see in terms of innovation in the UK?
Well, as I said, keeping the world safer, more energy efficient, and better connected are all secular trends which are longitudinal and which will persist regardless of what policy we have in any locality or who's in office in any locality. So at any point in time, different stimulus packages might change the quarter-to-quarter shape, but in general, we really benefit from those really strong tailwinds.
OK, let's have a look at your results in a bit more detail now. Strong full-year revenue of £3.1 billion on organic growth of 5.4%. The shares, though, biggest fall in Europe this morning, certainly at one point. On consensus, the numbers missed the mark. Are you disappointed? That must sting.
Well, we actually beat consensus on both the top line and the bottom line. So from an organic perspective, we exceeded consensus expectation for organic growth. And also at the bottom line, with 8.3% EPS growth, we also beat consensus on the EPS line.
So the share performance today, does that not sting?
Well, of course, I can't control how the market reacts. What we can control is what we deliver. And we're really proud of what we delivered today. As it stands apart in terms of the last couple of conversations that you were just having, in terms of magnitude of organic growth, a 5.4% organic growth actually really stands apart from some of the trends that we've been seeing in general.
Squeeze one final question. I'm running out of time, I'm afraid, Claire. 2 big acquisitions. Any more in the pipeline? Very briefly.
Yes, we have an active pipeline. We're going to maintain our focus on strategic acquisitions, and of course, we'll remain disciplined, but we're pleased to have an active pipeline.
We'll leave it there. Thank you so much for joining us. Claire Scherer, their Chief Financial Officer of Smiths Group, are coming out with their full year results today. That's it from me for the moment. I'll be back with the afternoon edition of Business Live at 4:30 to give you a wrap-up of how the European markets go into the close. We'll see you then. In the meantime, Wilfred Frost picks it up at 12 o'clock with all your lunchtime news. See you in a minute.